Hi, greetings and a very good day to all our viewers. Welcome to Group A's Financial Forum. Today we'll be diving into an engaging financial statement analysis of two major Malaysian public listed companies, which is Tabung Haji Plantation Berhad, THP in short, and Petronas Chemical Group Berhad, in short PCG, for the 2025 financial year. As a brief overview, THP, or known as Tabung Haji Plantation Berhad, is an agricultural company engaged in the upstream sector of oil palm and rubber, backed by Lembaga Tabung Haji. On the other hand, PCG, or can be said fully as Petronas Chemical Group Berhad, is a fully integrated chemical producer and the leading chemical producer in Malaysia. By joining me today are four talented financial analysts from our group, Mr. Wan, Mr. Nazrael, Mr. Umar, and Mr. Yang Jiakin. So, is it both of you can introduce yourself by turning on your camera? Okay. So, without further ado, let's get into our discussion today. I will direct my first question to Mr. Wan. So, Mr. Wan, looking from the perspective of profitability and operational efficiency, so how are you verifying their performance of these two companies in 2025?
All right, thank you, Mr. Nava. If you look at the profitability ratios for 2025, the contrast is like night and a day. Tabung Haji Plantations recorded very positive figures. They achieved a net profit margin of 11.55%, a return on asset of 4.06%, and a return on equity of 7.74%. This means Tabung Haji Plantation is retaining roughly 11.5 cents of net profit for every dollar of revenue. This indicates a highly healthy and resilient operational model. Conversely, Petronas Chemical faced a severe downturn. All three of their profitability ratios are negative. Their net profit margin dropped to negative 7.46%. This indicates several profitability challenges, meaning the company actually loses money on every dollar of sales made.
You are absolutely right, Juan. And if I recall correctly, PCG's losses were heavily driven by external macroeconomics factor, right? Like soaring production costs and compressed petrochemical margins.
Alright, spot on, Omar. Weak global market demand and compressed margins were definitely the primary drivers, rendering them unable to generate a positive return. Moving on to efficiency ratio, Tabung Haji Plantation significantly outperformed Petronas Chemical. Uh, Tabung Haji Plantation's inventory turnover is incredibly rapid at 40.12 times compared to PCG's 6.15 times. Furthermore, Tabung Haji Plantation collects its receivable nearly 25 times a year, whereas Petronas Chemical only turns over receivables 7.52 times. Of course, we have to acknowledge the industry differences. Tabung Haji Plantation deals with fast-moving agricultural produce, while Petronas Chemical operate in a heavier industrial sector that naturally hold inventory longer.
So many information is gained, but there are still having some doubt. So let's move on to our honorable Mr. Nazrin. So, according to the normal what our vision, we find out that there are short-term shocks and long-term financial risks. Normally, a company will go through. So, Mr. Nazrael, how do these figures impact their ability to survive?
So I'll start. Okay, thank you. HP is in a league of its own for liquidity. Their current ratio is 3.19 and the exit test ratio is 3.15. They have a more than 3 ringgit of liquid assets for every 1 ringgit of their debt. PCGs, well, on the other hand, PCG's current ratio is 1.44 and exit test is 1.11. While safe, PCG has a smaller safety net.
uh, few key cannot commit laws that tighter liquidate the same risk, right?
Mr. Nazrin, Young as you is given PCG's operational loss that tighter liquidity seem risky. Can you answer that?
Exactly. Yeah, any delay in receivables could pressure them. But let's take a look at level. Unfortunately, my line is so slow. So I have a problem with line. Okay, let me
That's okay.
continue. PCG is more conservatively financed with a debt ratio of 55% and debt to equity of 0.54. THP has a debt ratio of 48% and debt to equity of 0.91. So while THP is more liquid, PCG relies less on creditors for long-term financing.
Okay, so from just now, it was noticeable that Mr. Umar was silent. So maybe I feel that he has something to say. But I also have something to ask Mr. Umar. Mr. Umar, how are investors reacting to these contrasting profiles? So you have a lot of experiences about this. You're also a financial analyst. So based on opinion, can you explain that?
Okay, thank you, Mr. Sunawa, for the question. So I think investors are favoring THP, which has a healthy PE ratio of 6.58 times. Alright, PCG's PE is not available due to the net losses. So yeah, I think PCG paid a 7.00 cent dividend and significantly higher than THP's, um, which is 3.00 cents.
What? Paying 7 cents while making a loss? Are you sure? That seems aggressive.
I think is a survival tactics one because PCG is likely dipping into retained earnings from profitable years to what to keep shareholders happy, and it signals strength, but it's not a long term fix if the losses continue, I think.
Wow. The session is getting hot and interesting. A kind of a bit debatable. Okay. Yes, like I agree with Mr. Umar. It's a survival tactic. So like they are dipping into retail earnings from profitable years, and they also want to keep their shareholders to be remain as they are happy. So yes, Mr. Umar, but just want to go just a clarification, Mr. Yang. So Mr. Yang, just from your opinion, do you think who wins and what about the governance? Can you wrap it up?
PHP is the better performer for 2025. The active positive profit able and super actness from a government standpoint. PHP shows excellent uh, stewardship of Tabung page reserves. They protect the age value creation. Uh, I think with let's make a financial concept of all man voice preservation. PCG need to uh, address its optimization cost. THP promotes the management integrate and efficient and cost control as a keys to servicing uh, volatile market conditions.
Okay, so the day decision is with a lot of informative about these two companies. So I hope that our forum session will give a time spark for these two companies to increase their profitability and efficiency, to maintain their liquidity and leverage, and to check their market ratios. So, as a conclude of our analysis, I can say that this is a brilliant session. So, the importance of financial reporting in corporate governance should be highlighted. And that's what we need to look through if, let's say, we want to learn about something financial or about the accounting stuff. So it's really a great session and great session of sharing knowledge. So thank you for that. Bye.
Okay, thank you, Mr. Nawal, and all of the panel. Bye bye.
Alright, thank you, Mr. Nava.
Thank
Thank you,
you.
Mr.
Thank
And
you,
Mr.
Mr.
Nazrin.
Nova.
Thank you, Mr.
Thank you to all panel. Bye.
Bye. Thank you. That's end of our discussion.